Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your everyday investing decisions. Today, let us break down the inflation numbers that were published yesterday. Let me tell you, those numbers are going to raise your eyebrows. In this video, we will discuss what these inflation numbers mean for the economy, which sectors are going to feel the heat, and most importantly, how these figures are going to affect our investing decisions. So let's get started. The CPI inflation, Consumer Price Index inflation, hit 6.21% for October 2024. In September, the previous month, it was 5.49%. Now, this figure, which was recorded for October, is the highest in 14 months. This is not a small bump. It has breached the RBI's upper tolerance limit for inflation of 6%. So, what has caused this inflation figure to rise so high? Let us break it down. The real story behind this number is that of food inflation, which is the main culprit. It has skyrocketed by 10.87%. Now, some other eye popping numbers: vegetables have increased, the prices of vegetables have increased a whooping 42% year on year basis, oil and fats by nearly 9.5%, fruits 8.4%, cereals by 6.9%. So all these items which are of necessities which we consume on a daily basis have seen significant rise in their prices on year basis. Now this is not just about one year. When we compare year to year, let us see the figures on month to month basis. Now when you compare previous month to October, oil and fats have risen by 5.9% on a month to month basis. Vegetables have jumped 8.1% and fruits have increased by 1.44%. What is the reason behind this increase in food inflation? Well, some of the reasons can be vegetables like onions and tomatoes that we use on a daily basis have seen their prices rise significantly, basically due to unseasonal rains and disruptions in the production supply. Also, edible oils, the government has increased import duties on edible oils, which has also contributed to higher prices and adding to the overall food costs. And festive season demands, we know that prices are a function of economic demand and supply. So during festive season, when the demands are high, can be one of the reasons why the prices of food items have gone up. What are going to be the economic implications of this rise in inflation? Well, first of all, it is going to affect consumer spendings. When essentials are going to cost more, discretionary spending by the consumers is going to take a hit. So industries in consumer durable space, entertainment, luxury items are going to face the heat because of this rise in inflation. Rural inflation was recorded at 6.68% in comparison to urban inflation, which was recorded at 5.62%. Now, this could affect rural demand, which was on its road to recovery. RBI might have to rethink its stance about interest rates. Now, following the Federal Reserve rate cuts, it was expected that RBI would follow suit. But if the inflation figures remain so high, it might so happen that RBI, instead of reducing the rates, might increase the rates further. Now, if that happens, it would increase the borrowing cost in the economy. If high inflation persists, it would lead to economic slowdown. Why? Because it erodes purchasing power and affects consumer confidence in the economy. Let us now see which industries might get affected because of these high inflation numbers. The first that comes to mind is the FMCG sector. Now, this is going to put pressure on FMCG margins. They will have to decide whether they can absorb the cost or will have to pass it on to the consumers, means increase prices of their products. Already, companies like Unilever, Britannia, Marico, ITC, Dabur, Nestle, who are big names in the FMCG sector, have reported subdued or negative growth in the previous quarter. Also, industries in agriculture or food processing sector will face margin pressures. Though, because of higher prices, farmers are set to benefit, but industries in the food processing sector like ITC, Marico will face pressures. Automobile industries also can face pressures because of this. Now, automobile in India is still a discretionary spending. So when like essentials become expensive, discretionary spendings also gets affected. Hyundai, which is the second largest auto company in the country, has reported a drop in its profitability when the results came out for the last quarter. Banking and financial sector might also get affected. Why? Because if the RBI decides to increase the rates, the borrowing costs as well as the NPAs could go up. Key takeaway for investors following this high inflation numbers which were reported: firstly, check for sectoral impact. Look for sectors which can get highly affected and sectors which will not get much affected by this high food inflation numbers. You can always turn to sectors like healthcare and utilities, which do not get much affected by rise in food inflation. Look for company fundamentals. Check out the management and valuations of the company, which are more suited to weather out these inflationary storms. If you are looking for fixed investment options, well, if the interest rate rise, the current bonds would lose value. So, opt for low duration bonds if you want to invest in fixed income investments. Real estate and gold often act as hedge against inflation and become more attractive when the inflation pressures are high in the economy. So, what are the best investment strategies in such times of high inflation? Firstly, diversification is your all weather friend. Diversify into various asset classes across geographies to have less impact of inflation on your investments. Regular reviewing of your investment is a must. What worked in low investment scenario might not be optimal in the current scenario. Always have a long term perspective. Do not panic. Inflation is cyclical in nature. So, always have a long term perspective to meet your long term goals. Lastly, it is always quality over speculation. Stick to quality companies with strong balance sheets and good cash flows, and they'll help you weather out this inflation storm. While these inflation numbers are concerning, but every economic scenario possesses an opportunity where you can invest your money. Important thing is to research well, study, and then take decisions about investing. That is how you reach your investment goals. If you have liked this video, please hit the like button, share, and subscribe to help the channel reach maximum number of people. Until next time, stay safe and goodbye. Happy investing.